Welcome to the Money Tips No One Told You podcast. I'm Heather with First Pioneers Federal Credit Union, and I'll be your host. At First Pioneers, we're dedicated to caring for our members' financial needs with heart, and that means providing more than just financial services. It's about empowering you to take control of your financial destiny through knowledge and understanding. This podcast is all about guiding our listeners toward a brighter financial future. So get ready to embark on a journey towards financial well-being, because at First Pioneers, we believe that when our members are financially successful, we all succeed. Stay tuned for a wealth of knowledge and inspiration. Okay, guys, I'm just going to acknowledge something up front about this episode before we get started. This topic feels heavy. I get that. Today we're sharing some real talk about defaulting on a loan and what that really means, right? See? Heavy. Yeah. I mean, look, we all hope we never have to face this, but it's a reality and it's something that we just can't ignore. I mean, it happens, life roughs us up sometimes and things just don't go the way we thought they would. Or maybe we entered into a loan agreement not fully understanding it or what was expected of us in that agreement. All those things are true. So it tends to be a topic that goes ignored. It can be thought of as negative and people just don't want to go there. We tend not to like the negative, right? But what if we could flip that? And what if we could realize that it's not about negativity, okay? It's about knowledge. It's about being informed, because that's the first step in making better choices. So let's get right into it, okay? So first things first, let's talk about what it really means to default on a loan. I guess it may seem kind of simple on the surface, but I feel like there's some misunderstanding around it. People just really don't understand what it really means. But when you take out a loan, whether it's for a car or a home or a personal loan, you are entering into a legal binding agreement that you're going to make regular payments towards this loan over time. And these payments, they're typically going to cover both the principal, which that's the original amount that you borrowed, and the interest, which is essentially the cost of borrowing the money. Now, sometimes life happens, right? Maybe you lose your job, or you have a sudden, unexpected medical bill come up, a big one. Or maybe, sometimes you just hit tough times. It happens, right? It happens to all of us. And now maybe you miss a payment. Well, that's actually considered or called delinquency. And truthfully, it can start to be a red flag for your lender. Now, hear me. Missing one payment is not what we're talking about here. That's not a great thing. We all know that, right? Because then you're playing catch up. But it happens. Things happen. It's when you continue to miss payments for an extended period of time. We're often talking about, 90 days, even 180 days. That's when you've most likely officially entered default territory. And here is where this starts to get serious, okay? See, defaulting on a loan technically and legally means you've broken your agreement with your lender. So at this point, the lender now has the legal right to take action to recover the money that you owe. And this could involve sending your debt to collections. It could involve taking some kind of legal action, or it could even involve them repossessing the asset that you borrowed the money to purchase, okay? And that can be something like a car or even a home. But before we jump into repossession or anything like that, let's stay with default discussion for just one more second. When you default, it's not just between you and the lender anymore. Okay. That information is going to start getting reported to the credit bureaus. And then, you guessed it, it starts to impact your credit score. And it can actually be a pretty significant impact. Okay. And we're going to break that down in a little more detail in just a second. So let's go back to the thing that I think it's fair to say most of us would rather avoid thinking about, and that's repossession. So if you default on a secured loan, like an auto loan, for instance, the lender actually has the right to take back or repossess that asset that you bought with the loan. That item's also called collateral. You've heard us say that before. And the definition of collateral is something provided to a lender as a guarantee of repayment. So your lender says, sure, I'll loan you the money to buy that car. But if you don't pay them back that money, they need a way to recover it, right? And for an auto loan, that means that the lender, they can actually come and take the car back. For a mortgage, it means foreclosure, where a bank actually can take your home. To me, the thing that's actually really crazy in all this is that it can happen faster than you might think. And now this depends on the state where you live and the laws in that state, and of course the terms in your loan agreement. But repossession can actually happen after just one or two missed payments. Now, that's generally not what I've seen, especially here in Louisiana. But again, it depends on your lender and it depends on the terms of that agreement. I find what I see more is action is taken after, say, 3 or 4 months of missed payments. And the truth is, look, a lender, they're going to try to work with you before they take this step, okay? They don't want this to happen any more than you do. They really don't. They want a positive outcome for you. They really do. And they're going to work with you. They're going to call. They're going to try to make this work out. And I think there's a lot of people, they just don't get that part. Even though, you know, the bank or credit union is having to recover the item, it's still most likely going to result in a loss for them, because the item that they take back, they're most likely never going to recover the money that's actually owed on it. So they're going to try to work with you. Like I said, they want the positive outcome. They want this to go well for you. No one enters into this agreement thinking that this is going to happen, okay, on either side. So when I say that a credit union, they're going to call you, they're going to try to work something out with you. That's why they're calling. They're trying to work something out. Believe me, this is what they want to happen. They want it to be positive. But the problem, the challenge, is that once it's gotten to this point where they're starting a repossession process, there may be little that they can do to stop it, unless you have the ability to pay the outstanding amount that's owed, or maybe you can try to work out a payment plan. Seriously, I mean this seriously. Once it's gotten there, it's most likely been going on for quite some time, and it's just reached that point that this is what the lender has to do. And here's another misconception, I think, that a lot of people assume that once the car or the house is gone, that their debt is wiped out. And unfortunately, that's usually not the case. Often after the repossession, the lender is still going to try to sell the asset, like the car, because they're going to try to recover that money. The rub here is that the car may have issues, or maybe it wasn't well taken care of. So the value may be lower than what was actually owed. Not always. Again, sometimes it's just someone who was, they were just down on their luck, and this was the result. But I've seen it happen more times than I thought I ever would. That people, they just didn't take care of a vehicle. And at some point, they just stopped paying and they gave it up. And, especially in that instance, the lender may not get enough money from the sale to cover what was owed. And if it can't be sold at all, maybe because there's issues with it, then it has to go to auction. And that's the big one where that happens, where the dollars that they need to recover just can't be. So whatever they're not able to recover with this sale, whatever that difference is, you, the borrower, are still on the hook for that money. Okay, this is called a deficiency balance. And if you don't pay that amount, there can still be further collection efforts. And of course, that's going to show up when you try to get other loans or other lines of credit. I mean, it's kind of scary, right? But it doesn't end there. Y'all, it doesn't end there. Having a repossession on your record can actually stay with you for up to 7 years. So when I say it's impacting your credit in a big way, it's a big way and for a long time. Okay, so let's get into this a little bit. Let's talk about how this all happens. Your credit score and what's on your credit report, this is essentially a snapshot of your financial reliability, right? It's a number that lenders, landlords, even some employers, they're going to look at that and they're going to determine if you're a good financial risk. And we talk about this all the time. The higher your score, the better, right? But missing payments, defaulting on loans, repossessions, all those things are hurting your score, and they hurt it a lot. What do I mean? Well, let's start with the missed payments. Missed payments are going to get reported to all the credit bureaus. Okay, that's Experian, Equifax, and TransUnion. Those late payments can stay on your report for up to 2 years. Okay, just one late payment can drop your score as much as 60 points. That's one of the reasons we talk about this so often. Payment history is 35% of your credit score. Okay, so it's just a big deal. So it's the one big thing. No, it's one of the big things that you've really got to focus on. Figure out how not to miss those payments and how not to be late on those payments. Next is going to be that loan default. When you default on the loan, lenders see that. They see that you've just, completely stopped making the payments. Of course, this is going to cause your score to drop even further. And like we said, this default is going to stay on your credit report for 7 years from when you started missing those payments, right? Now, lenders are going to look at that when they consider your risk when you go to apply for a loan. Here's the thing. You can clear this up. Now, even if you clear it up, it still does stay there. So a future lender will see it. It doesn't erase it from your history. But if you clear it up, that does look good, right? Because in their mind, they're going, okay, they defaulted, but look, they were responsible enough to come back and clear this up and handle it. So that may actually help them when they're considering the level of risk when they're looking at your loan. So just kind of keep all those things in mind, okay? And then, of course, last is that repossession, and that's the big one. If your car or your home is repossessed, it shows that not only did you stop making payments, but that the lender had to take the drastic step of reclaiming that asset to try to recover their money. So not only will that drop your score substantially, like the default, it can stay on your credit report for 7 years. Lenders who see this will consider it a big risk factor. Again, paying it off, settling that debt will help. It will. They will see that. They will see the effort that you put forth to, make those things right. But at the end of the day, it's still there. So The payoff may help you get approved for a loan in the future, but the risk is still most likely going to be considered high for you with that new lender. And the thing is, y'all, having poor credit can impact so many aspects of your financial life. You know, you can have a harder time getting approved for the new loans, like we've said. If you are approved, you know, you're most likely going to have a higher interest rate, sometimes much higher. But a poor score can also affect things like your ability to rent an apartment. I don't know if you knew this. There's some employers that actually check your credit. There's some industries and such that those are things they want to know. So they're actually going to look at your credit before they will hire you for the job. And it could even affect something as it feels simple to get a cell phone plan, but that's actually a type of credit. I don't know if you guys knew that. We've talked about it other times, so maybe you've picked up on that, or you do know that. But you have to have credit to get a cell phone plan. And if your credit is, you know, less than stellar, they may not consider you a good risk, and they may not allow you to have that plan. So yeah, it's a part of our lives. It's just a big part of our lives. Okay, that was a lot. I know, right? And we've established the long-lasting painful impacts that all this can have. So we've covered the heavy, right? Now let's talk about the silver lining. Let's talk about how you can avoid getting to this point. First, talk to your lender early. If you know you're going to have trouble making a payment, don't wait, all right? Contact your lender as soon as possible. There's often programs that are in place. You know, it may be a temporary deferment. There may be a modified payment plan. There may even be a refinancing option. But you have to ask, right? How are you going to know? How are you going to even know what the options are if you don't ask? So let's find a solution before this gets out of hand, okay? Just come ask and talk to us. Second, creating a budget. We talk about this all the time too, don't we? I know, but it's so true. Sometimes you just have to back up and take a good hard look at your finances. If you're struggling to make payments, a budget can help you find areas where maybe you can cut back, or maybe you can reallocate some funds. And sometimes just small changes can make a really big difference. And look, I'm not going to deny that sometimes these are hard choices, but let's also be honest that if it's gotten to this point, it's time. Okay, so look at that budget and let's see what we can do. Next, ask for help. You know, we've already said call the lender, but there's even more ways you can ask for help. If your financial problems feel overwhelming, don't be afraid to say it that you need help. Get help making that budget. Get help looking at your finances. Sometimes when you're in this situation, it's hard to step back and see what you need to see. You're in the middle of it. It's hard for you to see it. But someone else may be able to look at it and make suggestions that you never saw, that you go, oh, well, that was easy. Wow, why couldn't I see that? Because you're in the middle of it. That's why that's so normal. That's such a human reaction. But someone else might go, oh, look, what if you did this? And look, now you've got a solution. There are also some nonprofit organizations that offer free or maybe even low-cost services to help. Here at the credit union, we have financial counselors on staff, and we're glad to help. We're glad to sit down with you and see what we can do to help you with the situation. Truthfully, this could even include speaking to a counselor to work on things like your relationship with money, or your mindset, or really maybe there's other issues that you have going on, other challenges that you need to deal with. Financial stress can have a huge impact on you mentally, on you physically. It's such a part of our lives that, I mean, how can it not have a big impact? So no matter what the help is that you need, I encourage you to find it and use it. You know, just ask the questions. We've all been there. We've all been there. We've all been in the same boat. Okay. We may be in the same boat with you right now. So never be afraid to just speak the words and ask for help. Okay, and the last one is building an emergency fund. We've talked about this before too. Life happens. We said it happens. But having that little financial cushion, it can help you maybe avoid missing some payments. So even setting aside a really small amount, maybe each month, each paycheck, it can help you cover one of these unexpected expenses down the road. So, do what you can. You'd be surprised how even just a small amount can help you get over a hump when you need it. If there's anything I want you to hear me say today, I think it's this part. At the end of the day, no one sets out to default on a loan, right? No one sets out with the intention that the car is going to get repossessed. I mean, most of us, we're entering into these loans with good intentions, right? We're excited. We're starting this new part of our lives. We're making this big purchase. And, we're going to work until we just can't anymore to try and make those payments and try to make this work. That credit union, that bank, they're going to work with you as long as they possibly can. We're going to try to make this work. But life happens. We all know this. Life does not always go according to our plans. And there are some things at times that they're just out of our control. And there's just nothing we can do about that. The good news is there are things out there that can help you. There are ways you can help yourself. There are programs that can help you rebuild your credit if you need to. There are ways to get you back to a financially stable place. Remember, your credit score, that's just one part of your financial picture. I get it's a fairly big part, and I admit that, defaulting on a loan or facing a repossession, it can feel like a really major setback. But it's not the end. I promise you, it is not the end of your journey. A little time, little effort, the right tools, you can absolutely recover from this and get yourself back on solid financial footing. Here at First Pioneers, we're always ready to help you navigate all those ups and downs of your financial life. I say it all the time. If you have questions, if you need advice, please don't hesitate to reach out to us. We are here for you in any way that we can be. But now before we go, I want to talk about my bonus tip, and that is the power of communication. Because I find one of the biggest mistakes people make when they're struggling financially is avoiding the problem. It's easy. Oh my gosh, how easy is it to feel overwhelmed or embarrassed, and then you find yourself, you just ignore it and you just kind of hope it'll get better. You think, oh, things will get better. It'll turn around. It's going to be fine. Because it's hard to admit that things have gotten out of hand, isn't it? It's hard to admit that you don't understand something. That's our human nature, that we don't want someone thinking that we're less than and there's something that we didn't get, and are they going to look down on us? Are they going to judge us? Y'all, no, they're not. How many of us have been in the same place? And like I said before, we are in the same place. And you know what? Maybe we could work together and figure it out and help each other and be each other's cheerleaders. I think you would be surprised how many people would be there to just help you and lift you up and help you figure it out. And the truth is, most of these lenders, I know this definitely includes First Pioneers and other credit unions. We would much rather work with you than see you default or face repossession. We don't want that to happen. That is not the thing we want to happen. So if you find yourself falling behind on your payments, reach out before things have gone too far. Even if you're just a month behind, a quick phone call to your lender can open the door to options that maybe you didn't even know you had. I mean, we don't know what we don't know, right? We mentioned this a little bit before. There may be a loan restructure option, a temporary payment deferral, even as far as refinancing your loan. The point is, there may be a solution. You know what? Scratch that. I find it's rare indeed that there is no solution available. The exception is when we don't ask or we don't look for it. Now, I will absolutely be real in this moment with you and say it may not be the solution you really wanted. Okay, that's true. I will concede that point. But sometimes we have to realize that in order to get where we want to be, we have to make hard choices and do hard things. The good news is we can do hard things, y'all. How often have we seen that success is just right on the other side of a hard decision or a hard action? But the key, the place to start, is communication. So if you take only one thing away from this episode today, let it be this. Don't wait for things to spiral. Talk to your lender early and often. It could truly make all the difference. I am so glad you stuck with me through all this. I know some of this was tough to hear. It wasn't always easy to say. I have to admit that. But the reason we say it, the reason we do it is we want this information to help you. We hope it has. We hope that it's given you clarity on what it really means to default on a loan, how a repossession could impact your credit, and most importantly, how you can avoid these situations in the first place. And look, if you enjoyed this episode, don't forget to subscribe and share it with someone you know that might need to hear this message. Until next time, take care of yourself and your money. That wraps up another episode of Money Tips No One Told You. We hope you enjoyed the insights and tips shared today. If you have any questions, thoughts, or topics you'd like us to cover in future episodes, feel free to reach out. If you found value in today's episode, don't forget to subscribe, rate, and leave a review. Your feedback helps us tailor future content to better serve you. There are several ways you can find us if you need further information or need to speak with a financial counselor. Visit us in person in Lafayette or New Iberia, Louisiana, or at firstpioneers.com to find out how to become a member of our family and find other financial information. Also be sure and check out the show notes for important links and important information. Your financial journey is important to us, and we're here to support you every step of the way. We hope you have a great day, and we'll see you next time.